Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Monday morning edition of Benzinga's Pre-Market Prep. I'm Spencer Israel, joined by Joel Elconin and Dennis Dick. Hope you all had a nice, relaxing weekend. We got some news today. We're going to talk about this report that Fox is potentially maybe not going with Disney, maybe going with Comcast. Talk about that. We'll talk about today is the day we're getting our Trump infrastructure plan. What movers will come off of that news? We're going to talk about the slow but steady rally in cryptocurrencies with our guest Jeff Goldman. He's on today at 8:35, and of course the rally up from last week's lows. We'll talk about the SPOOs and trades and levels in the major indices after last week's volatility. Joel, let's start off with that. Tell us what we are doing this morning in the S&Ps.
Markets acting normal this morning, trading up 27.25 handles at 46.25. That's a little bit over 1%. I'll recap that day with Wild Day on Friday with Dennis when he comes on, but nice rally. My upside target is up near 2,700. I don't know if we got another 54 handles of rally in it, but we will see. Crude back over $60 after a couple day tumble, 60.20 up a stick. Gold up 450 at 13.20.20. Silver up 21 cents at 16.35. And Bitcoin futures, that's what I'm quoting, up 1.85%. That's up $160. And man, this $8,500 area here, if it hangs out much longer, we just might have to convince Dennis to get long some Bitcoin. Dennis, how you doing this morning?
Busy trading like crazy here, Joel. My fingers are getting sore here. I gotta go back to automation. It's just too busy here.
Real quick before we go into a lot of details and everything,
sure.
People are in the chat. They're talking about, this open here, like SPOO's up 28 handles. You've already had a nice rally. We already know a lot of the gains occur, in the market like overnight here. And I just mentioned, fair value calculations, going into the market, trying to find out stuff that opens up under fair value. I just wondered if you had any or stuff on, conversely too, that open up over fair value. Besides what you're doing in the pre-market trade and picking people off, any opening strategy?
That doesn't sound nice when you say it like that. We're just we're getting more information into the market, not picking people off.
Okay, I stand. Can you strike that from the record now?
It's fine to do. It's actually what it is. I mean, you're looking at orders that you think are mispriced and you're buying or selling them. So I get picked off all the time. I forget orders out there, and the market moves all of a sudden. It's like boom, full, sold. I was like, oh no, I'm getting picked off.
And then you ask us if
pretty much the whole market, pre-market after hour. It's pretty much the whole market all the time is getting picked off.
But
information.
Any other strategies? Anything else that you're looking at here? I mean, we can go over the news. The upgrades.
Right now, it's all about stat herb. So I'm just looking, at the relationships. So when something's trading up a little bit too much pre-market, I'm shorting it. When something's not trading up enough, I'm buying it. Basically based off of the S&Ps, depending, if you got an oil stock, you want to look at the XLE. XLE is trading up 1.78%. So some oil stocks might only be trading up 0.5% or 1%. Maybe they're buys. Maybe there's news on them. You got to always check the news. You got to know all the information out there before making that call. Maybe it has a lower beta. If it's a lower beta, then it shouldn't be up as much. But there's a lot of considerations. But that's how I'm trading these types of markets. I mean, I'm basically an inefficiency trader. So I'm looking, for market micro and efficiencies in these stocks. And you need to know all the news if you're trading inefficiencies, because if you miss something, then you're going to be the one that's misinformed. So, you've got to know all your upgrades, downgrades. You've got to look at, your Benzinga Pro. You've got to look at all of your news out there and make sure you've got all the information necessary to make that informed trading decision, especially in the pre-market. Because stuff is always mispriced in the pre-market. Spreads are wider. There's still not a lot of price discovery happening. I mean, you look at certain stocks, even, you could look at something like General Electric today, where you say, oh, well, General Electric's only up 0.67%. It should be up more. but there's JP Morgan comments on it. So you got to know that. So it's always tricky to, really, know all the news out there, but you want to know the main stuff. And that's why it's very important to keep an eye on your news feeds, keep an eye on your pro, and make sure you know the main stuff.
I'm a very inefficient trader too. I seem to be buying when the market's going down and selling when the market's going up. So I guess we're kind of similar. Another thing, though, that I'd like to do before the trading day or the trading week, see what companies are reporting earnings, coming up the day after, Monday or Tuesday or Wednesday, because a lot of times we like to call it position squaring. And it's where, going to stocks had a big run going into a number, institutions maybe lightening up. Conversely, if a stock's really been beaten up, guidance has been lowered a few times, and it's just, kind of forming a bottom. You can kind of, find some lower risk trades or trading ranges. I'm really not a trading range trade. What was that? Tradingchannels.com or something? That's not really my particular.
No, it was channelingstock.com.
Channeling stocks.
That was back during the tech, and everything when we got channelingstocks.com. I always joke about that one.
Yeah.
Buy low, sell high, the same stock again and again. Technicals are a factor. You've got to consider technicals as well. I would say this market, technicals are more of a factor probably than they ever are, because so many people are just, not worried about individual news. They're worried about, hey, this market's crazy every day. What's charts look like? So technicals are a big piece of the component right now. So basically, here we'll do a little bit, and jump into it. I took it away from you. I'll bring it back to you. But you've got to go through the full analysis of what you're doing every day. And if you're making a stock trading decision, first I want to know, what do the technicals look like? Second, what I want to know is, what is
news,
any individual news on the stock. Third, what's the order flow look like? Does it look like there's buyers or sellers at a specific level in the book? It's all important stuff to consider when you're making those trading decisions. So technicals are one piece, but news is obviously a huge piece. I put a lot more weight in news than I do in technicals. And then three is order flow. So you've got to look at all those things when you're making trading decisions. And then sentiment's a consideration as well. So putting all that together, that's how you try to make your trading decisions.
And listening to the pre-market show and jotting down your pre-market highs and lows is always something that, we try and stress during the show. But enough to overall strategies here. Dennis, couple questions. I'm getting questions in Google. I'm getting questions in the pre-market chat. The Qualcomm saga. Dennis, are you still holding out on this one? I guess.
And the reason I'm in is exactly for what we saw here over the weekend. I mean, they're talking now. And the board knows Broadcom wants this company. They've got an $82 bid out there. They know when this goes to vote at shareholders, there's going to be some people who are going to vote for it. I would be one of them. Now, my small amount of shares probably aren't going to be that influential, so I don't know if they're going to be calling me up trying to get my vote. But that being said, I think there's, a distinct possibility there's a lot of people out there like me. So I think the board knows it too. So that's why they're talking now. And who knows, maybe they can get a better price than 82. So now there's multiple considerations here. Let's say they do come to an agreement. Let's say that stock does go to 82. Now I have antitrust issues though, because there is some issues here where they've got businesses that compete here. So there is going to be antitrust. So even if the deal gets announced at 82, let's say, in a couple of days or something like that it's official and they've agreed, stock's not going to go straight to 82. It's probably going to go to like 74 or 75. Because people are going to worry that there's antitrust issues and they're going to, vote the deal down. So upside still here as the deal gets announced, it's 74, 75. Deal goes through. Obviously, it could be 82. If they get a better price from Broadcom, I don't know if they're going to get a better price now. They went from 70 to 82. I'm not going to get I don't know if they're going to get a better one, but I still like the risk reward here. Not so much at 65. It's getting a little bit pricier here this morning. It's trading up almost $2. In the lower 60s, though, I liked it. I still think even if the deal doesn't go through, I think the stock's maybe 6-7 points downside against the 15 points of upside. So it's still kind of got a 2-to-1 risk reward. That's why I'm sticking with it.
Another factor too, if the board is going to convince shareholders, try and get them not to vote for this deal, then they better have a plan. They might come up, they might say, okay, we're going to buy back stock, or we're going to spin something off, or do something. Let me go to a long. Do something just to, to acquiesce shareholders that are unhappy with the performance. Let's look at this thing longer term here. Let's go to a monthly chart. I mean, you had your craziness back in 2000 when it went to $100. Oh, how's that for a whole number? $100 even. got hit.
That was in the year 2000. 17 years later, we're at 65.
Not good.
That long-term investing works well unless you buy in the bubbles. And
Right.
then it doesn't work so well. And that was a bubble.
Okay. All right. Let's get to our morning news stocks then.
Well, continue your point. So you were going to say it's $100. What are you going to say technically?
No,
here?
I wasn't going to say that much technically. It's just that if they're going to convince the board, if they're going to convince shareholders, they better have some kind of plan in place in order for that.
Yeah.
I mean, $70 has been a wall in this stock going back to middle of 2014. I see a high at 71.62. So clear breakout over 70, and this looks good. But you've been in a trading range from 50 to 70 going back to April of 2016.
John Dodson, I'm on your side. I'm hoping there's going to be a deal there for Qualcomm. So he owns it there in the chat too, and that's what I'm betting on. That obviously I'm long the stock, so I'm betting that they are going to work out a deal. Jump over here in individual stock news. We do have some deals to talk about, Mr. Spencer. General Dynamics getting down and dirty, making an acquisition here this morning. Merger Monday. What do you got for me?
They are acquiring CSRA. Okay, make sure my headset is on. CSRA for $40.75 per share in cash.
Done deal. CSRA trading 10 cents off in the pre-market here. So obviously there's some markets pricing in zero antitrust issues on this one. $40.65. So not much more to say about that. General Dynamics trading up significantly, not so much because of this deal, but because the market is up significantly. GD was really chopping around, but not hit that hard really when you look at this chart, Joel. I mean, really, stock got up to 226, came down 205. I guess you're there. I mean, the market was off 10%. I guess it's about 10%. So moving along with the market, everything moves with the market nowadays.
Up 480 at 216.90. Look at some highs that you're going to have to deal with. I see one at 17.23 and also one at 18.62. Then you bust into the 220 handle. Let's see, it's your 1, 2, 3, 4, 5-day high at 222.35. Let's see how this is looking in the pre-market, see what they think of this issue. I need to go to a shorter term chart for that, though. They do have it up $3.90, probably not a lot of volume trading. It looks like that everyone's pretty confident here this deal is going to go through. So don't even spike high.
Smaller deal for
yeah,
GD,
it's a small
really.
deal. 219 is where it's traded, but boy, not many shares have traded on this news. Oh, and Dennis, one other thing. I'm sorry. I know I'm digressing here. I wasn't in front of the screen on Friday, and boy, you guys had one wild day. But I doing the numbers on over the weekend. I looked at the daily chart, and I know that a lot of people don't put that much credibility into the pre-market and after hours action. But on Tuesday, when the world was absolutely coming to an end, the SPOOs made a low at 25.29, right? And I don't know what got the boat rocking to the downside on Friday, but they were hitting this thing, and it looked like there was absolutely no tomorrow. We're going to slide into the 25 handle. Lo and behold, we went within 1.25 of the low from Tuesday. That is, I mean, if that's not a double bottom, that's my favorite double bottom of all time there. I mean, that's a huge level. And now what are we, 130, 120 handles off that? So pre-market action, I mean, if you're not going to watch it in the stocks that much, watch it in the SPOOs. If you were sitting out there with a 29 and a quarter bid or 29 and a half bid or even a 30 bid, you didn't get filled. But boy, oh boy, just a great technical level. And you see the action afterwards. So that, I mean, longer term, you can be pretty confident. I mean, they're not going to get that today unless Trump falls off the podium or something when he's doing the infrastructure deal. But there was one heck of a rally, and that's why Dennis and I have always put a lot of faith in double tops and triple tops and double bottoms and triple bottoms. And boy, that's.
Let's just go over that one more time, though, just so everybody caught it, because it's a good point that you just made here, and that's the one thing why you want to look at sometimes the overall 24-hour action, because the S&Ps on, and which day was that? Was that Monday?
Tuesday.
Was that Tuesday's action? The S&Ps, remember that day, overnight were down 106 handles. And we rallied, and that by that morning, we were not down. So we were only down like 30 when the markets actually opened. So none of that shows up on your normal charting because people in a lot of the charts don't, do the 24-hour action. but it was there and it traded down there. And what the point you're making is that we went down on Friday and tested that overnight low and it held. So where it looks like on the charts, it looks like it made a new low on Friday. It's really not the case on the S&Ps because we were down there overnight Tuesday. So that holding, Joel, does that make you bullish here now? Like, I mean, we've had such a rally off the top. I mean, it's so hard to say, okay, now do we come in here and buy? Because we just rallied 120 handles from the low that we just saw on Friday. I mean, that is one of the most wicked rallies I've ever seen. What are your thoughts
I mean,
now?
Now it's like, I shouldn't have taken
Holy
it.
Toledo, I'll say it for you.
I should have taken the day off on Friday to be with Lisa. I mean, that's what I'm thinking. But no, I mean, you had on the 15-minute chart, this was a little before midnight. So that's Monday night and early Tuesday morning. On a 15-minute chart, you had a 29 even low, 29 and a quarter low, and 29 even low. So it tested it 3 times, and then I have the chart up here. You had the rally. You went back over 2,700, and then it came all the way back down. And, I mean, that's one of those times where you just have to put an order out. I don't know if you wanted to go 27.31, 27.32, but you just want to make sure you get filled on something like that. And if you miss the turn, well, then you see what you would have been buying into. But that's why I always like to keep an eye on the overnight highs and lows, because those people that were up at midnight on Monday, man, they were early Tuesday, they were back at it Friday at 13:45. So just an interesting thing to note here, and I just couldn't go through the show without mentioning that. Keeping an hour on your after hours and pre-market highs and lows.
Okay, other merger news. It's not official here. There's no, or is there any other M&A there, Spencer, this morning? Nothing official,
I saw
right?
The GD deal. I didn't.
Did we do the Fox?
The GD deal.
Fox
what I wanted to segue
Fox
into, and I did a poor job of it, was the Fox Comcast. CMCSA is back in the mix here, being announced this morning that they are interested in Fox assets here once again. So Fox is catching a bid. I mean, Fox catching a bid because of Disney here. But is there anything to this? Are they going to come back and try to trump Disney's bid? Is that what the market's speculating here? What's going on here with Fox?
Well, the report from the Journal is that Comcast is thinking of reviving its pursuit of Fox. So they had originally submitted a bid that was 15% higher. This is, again, all according to the Journal. They had originally submitted a bid that was 15% higher than Disney's bid, according to people that they spoke to. And that bid obviously rejected. Disney got it, and now Comcast is reportedly back, thinking about getting back in the game for much of the same assets that Disney is.
So maybe to potentially trump Disney's bid.
Maybe.
I mean, Fox really isn't responding much to this, so I don't know if there's a lot to it. I mean, Fox, you could say, well, yeah, but they're up 2%, but I mean, the market's up 1.3%. So, and Disney itself, which obviously, Fox is tracking to a certain extent now, is trading up $1.50 in the pre-market as well. So I don't know. I don't know if the market's putting that much weight into this, but that being said, never hurts to have another little potential buyer on the table.
Pre-market high, that was made at 7:45 at 36.11. 2 brackets in a row. You hit 36.11. Actually, is that a 36.50 print? Yeah, there was a 36.50 print in there as well. To be honest with you, I don't understand what's going on in all these mergers in the entertainment industry. There's a lot going on. Obviously, no one's going after Netflix right now. Talked about Disney or Apple going off them. I mean, I watch a little sports on TV and, try and watch CNBC for a few minutes, but I have to turn it off. So I just don't know where this industry is heading, what kind of consolidation. Obviously, Yahoo deal with done Verizon. I mean, it's hard to figure out from a technical standpoint. Fox, you had a trio of highs right around the $37 level, from $36.93 to $37.15. That's $1.25 away. So if you're trading it technically, see what happens at $37. Imagine if a deal's done, price could be higher than that, but resistance at 37.
What about Viacom? And they're obviously going to be meeting with CBS here. We know they're meeting right now, but it's kind of been news that's taken the backseat to the overall market here. But here's been Viacom just basically trading in between like $30 and $34. I know I had that one play, and we talked about on the pre-market show that I bought it on the week when the earnings came out and the stock went down. I was actually playing it from the long side because I thought it might bounce right back because the potential deals on the table, and it did. And obviously I turned around and sold it for a quick profit. It was one of my better trades. I think I bought it at 30 and a half and sold it that day at, I think it was in the 32 handle. So I made a quick 2 points off of it. So it was a good call. What are your thoughts here on VIAB? Just technically, I mean, 34 has been a wall of resistance.
Huge. Yep.
Yeah, but obviously we know technicals take a back seat. If they announce a deal with CBS, it could be at a significant premium. So that would make the stock blast off. You think, nibbling on pullbacks and something like this, with Fox, being, obviously Fox getting acquired by Disney, is Viacom the next one? Is CBS?
I don't know. I don't know if you're trading at Dennis. I think that day when you bought it, I don't think it ever traded that level in the regular session. I think
no, it didn't.
Yeah,
it was actually, I was kicking myself because I had it and it was 30 and a half, and then it went down to 29 and a half, and I was like, do I buy more? I'm like, it's down $1 here now. I'm like, man, I've got I feel like it's going to rally on this, but now I'm down $1 because I bought 30 and a half, and now it's 29 and a half. I was like, I can't add to losers. I never do that. I don't like adding to losers. I should have, because I was right. And that 29 and a half, I think it was like 1,000 shares of trade down there. And by that pre-market, obviously opened up at 32 and a half and ran to like 33 and a half. So it would have been a really good buy in the pre-market, but because I was already taking heat on it, I did not buy more.
Let's see here. This one was the big lagger. I'm looking at Viacom B here. You had your gap down. This was back during the summertime. Came back to fill that gap. That one day got really excited on the merger talk. Went to 35.55. But after that, every time it's got over 34, it's caught a cold and it has not been able to hold that level. Now you're itching back towards it. I'm getting a little help from Mr. Market here. But solid breakout over 34 here. And, you got some real estate up to 36. Besides that spike high in the 35 handle, 34.50 has been a good number to keep an eye on the upside.
Ed Parker talking AMCX. I'm not sure if I mentioned this on the show before. He's saying potential double bottom, and obviously, we're talking about content providers and networks. I mean, AMCX is in the mix too. They are small too. I've always thought AMCX could be a target. I actually own this stock in my invest portfolio just because I think they could be a potential target. I also like The Walking Dead, but that's not a reason to buy the stock. AMCX did have a nice spike, obviously off of that $48 low, which is a double bottom there. I don't know. Do you think some of these other network stocks could be in play?
I mean, what?
I own it because I think it's a possibility.
I just don't know where the whole industry's going. I mean, people are watching on their phones and the mobile devices, NFL traffic going down. I don't know. And for a person who doesn't spend
a lot of unknowns.
Yeah, a lot of unknowns here. But when you it's kind of like having a bid underneath a stock when you have.
I'll tell you where it's going.
You tell us, Spencer. You're the media expert.
It's going similar to how a bunch of different companies got their own channels once cable became a thing. Everyone's going to get their own over-the-top streaming service. And so it started with Netflix. They were the first. And then we have Hulu. And now we're getting Disney. Now we're getting ESPN's going to have their own thing. And then Fox is going to have their own thing. And everyone's going to have their own over-the-top streaming service where you don't need cable. HBO has their own thing, HBO Go, where you don't need to subscribe to HBO to get it. It's like a separate thing. Everyone's going to have their own over-the-top service. So it's going to be the same thing, just in a different medium. Then we're going to have like 30, 40, 50 different over-the-top streaming providers. And the platforms that host said providers, Apple TV, Roku. I'm sure I'm missing one or two.
What does that mean for Comcast? That can't be good news for them.
Well, all their properties are going to, I think, do the same thing. They're gonna. So who does Comcast own? They own NBC, right? So NBC is gonna have their own over-the-top provider for, I don't know, let's say just NBC primetime, for example. Or I've been watching the Olympics. I've been watching all of the Olympics via NBC on the app on Apple TV is how I've been watching them, because you get, if I were to watch cable, I only get what's on that channel, right? But on the NBC app, I get way more content, right? I have a choice as to what I watch. So that's why I've been watching it that way. So it means for Comcast that all their other properties, other cable properties are going to just come up with their own independent over-the-top provider where you don't need cable. You can pay, if you really want NBC, for example, you can pay $10 a month to get.
It's going to debundle. Everything's going to go to debundling.
Yes.
Do you know who the big winner in the media industry is going to be?
Who?
Whoever picks up Benzinga's pre-market prep.
There we go.
We're out there.
Joel at benzinga.com. 44. Didn't they have Comcast have a little Bitcoin thing? Was that on January 24th? I got to look at my Benzinga Pro. Remember?
Did they say Bitcoin?
That was when they had
They were going to accept
earnings
Bitcoin.
or something. No, they had a spike on earnings on the 24th. That's it. A really good day. No, they actually had a 2-cent beat. They missed on sales though, but on that exact day, they made the high of the move at 44 even, and then they got caught up in the market, just trying to battle its way back. Flat here in the morning. I would use your 2-day high of, you haven't even taken out 38.99. So you need to take out Friday's high, and then 40.16 is your 2-day high. So it's pulled back, but you could attribute that a lot to the market.
All right, let's jump back over 826 here. We'll jump back and over into some market movers, but let's go to ratings because there's some interesting ratings here this morning. I'm going to take you actually not to an upgrade or a downgrade, but just to some movement here from Credit Suisse, and it's on the solar stocks. And I haven't looked at First Solar in a while, but they are starting First Solar at an underperform, FSL, or put a $55 price target on it. Here's a stock that has been hit pretty hard. Here's a stock that I am interested in. I would love this stock to get back to $50 and I'd buy it, but I don't know if it's going to get that far. It's went from 76 down to 61, got down to 58.80 on Friday. It's trading up here slightly in the pre-market. Obviously, though, negative commentary with the underperform from Credit Suisse here. So that is weighing on the stock. And then also, just before we jump into the technicals, they are starting Sunrun, RUN, at an overweight, or is that what they call it, overweight there? Outperform. They've outperformed a Credit Suisse. And they're putting a $15 price target on this $5 stock. So Sunrun getting a lift in First Solar. Normally would be getting a little bit of a hit, but because we're up so much in the market, it's actually trading the green. Thoughts, Joel, on Run, First Solar, commentary from Credit Suisse?
Boy, First Solar is just in a tricky area. I mean, I don't know what to tell you here. You've come hard off the high with the market. I mean, $50. Even I'd be a little cheaper than you, Dennis. I'd like to see it fill that gap under $50 at 48.08. That's part of the mystical run it had run up to over $70 on a daily chart. Your next low that you have, and be aware of this, folks. If you take out 58.80, there's really nowhere to turn until $2 lower. Your December 5th low is 56.81 and another lap. So it's just, I don't know. You're really catching a falling knife here. And what's the other one? Run, RUN?
Yeah.
Ugly looking chart. $15 price target on this one. Trading up 23 cents. I mean, I'm not chasing it here, but that aerial of the low from Friday at 5.08, you had 3 other lows, 5.10, 5.13, 5.16. So, if you're buying it here, you're risking under $5. If you're a little bit more of a cheapskate and you want to try and buy it at 5.10, 5.20 area, a little bit of risk reward. I don't know what happened back in late September on this thing when it went down from it had a huge range day. I don't know if that was a bad print or whatever. It went all the way to 421, ended up closing at 547. So I want to check out the reason what happened on that day before I stepped into this stock off the analyst move.
I'll just throw Spencer under the bus here for a second and let him go run some research here. No pun intended. But does Gordo cover RUN?
No, I don't believe he does.
Okay, because I always follow. And when it comes to solar stocks, I'm going to say it again. The guy that I follow, I don't know anything about the fundamentals like Gordon Johnson does, so I just follow whatever Gordon Johnson's doing because that guy knows his solar.
What are you?
I've made money off him before. We got to get Gordo back on. I call him Gordo. I don't know if he likes that or not, but I've done it to him on the show too. But Gordon Johnson, man, there's no analyst that knows that sector better, in my opinion.
I'll tell you who he follows right now. He follows as far as
solar. Well, give us his ratings. Let's just cover solar really fast. Give us what he's got.
All right. Well, this is according to I'm going off tip ratings here. So Jinko Solar, JKS, he's got them at a sell. I'm doing he covers steel too. I'm going to ignore steel for now because we're doing solar. So First Solar is going to buy on CSIQ, he has a hold on JSO. He has a sell on Trina Solar. They got taken out, right? He had a sell on that, but he hasn't rated them for a while. So I think, but those are the four solar stocks that he does rate. Is First Solar, CSIQ, Jinko Solar, and JSO. So that's it.
Thoughts on any of those, Joel? Should I be jumping in there?
No.
Which one's to sell?
He's got and Solar Edge. Sorry, Solar Edge to a sell.
Which one do you have the sell on?
Sell on Jinko Solar.
That's JKS.
JKS, and then sell on Solar Edge SEDG, and sell on JSO.
And Jinko too. So
Jinko,
Solar Edge.
Jinko, JSO, and Solar Edge. He has sells on. He has a hold on CSIQ, a buy on First Solar, and that's all.
Okay, so the really First Solar is the only one he likes right now.
Yeah, nothing on the chart.
CSI is tough because I got that CEO potential bid on the table, but remember he was on our show, and the reason I sold it up in the 17 handle was he didn't know if he believed it.
Yeah. Oh, you did.
And I was like, as soon as Gordo says he doesn't believe it, I sold. It was like 1740, man. That guy's good. I like him, and he calls a spade a spade. He's not scared. You don't like it? Sell. All right, imbalances. Let's go jump over here. Take a look. General Electric. 303,000 to buy, so somebody's not as scared of those JP Morgan comments from this morning. Ford Motor Company, you want to look at that one. It's a big one too. It's been bouncing around. 193,000 to buy. Alibaba, 159,000 to buy. And BABA, it is getting significant lift in the pre-market, trading up over 2%. And then Twitter, 103,000 is selling Twitter here this morning, so that's significant. Twitter is trading in the green, but just when that imbalance data just came out, it just took a little bit of a hit. It was trading up and up over $32. It's now trading back under $32 here, just after that data hit the wire for the sell imbalance there. 103,000 shares.
Any news on that, or just rebounding with the market here, hanging out at $32 in the pre-market? Let's take a look at the daily chart. Still just digesting this big move that it had. What was that? That was on Thursday. I'll tell you, the big level for this one, I love my double tops and double bottoms. If you're leaning on something, lean on 29.68, 29.71. Those were your lows from Friday, Thursday and Friday. So good support under $30 in Twitter. And Barron said something negative about that.
What Barron say?
Just that, they were comparing low numbers and stuff, and they're not going to be able to continue to grow. And there was one metric, man, it escapes me right now. There was one metric that declined. I don't know if it was engagements or I can't remember.
They didn't like it.
And they're also stuck at the same amount of users. Whatever the amount is on the platform, they really haven't been growing that. But they've been bearish on that for quite a long time. But just speaking of dogs here, and I noticed that they have earnings reports. Do you think Blue Apron has a chance here at all, Dennis? The Snap kind of got killed. That came back with a good report. Twitter, I put these stocks kind of in the same doghouse. Grubhub went absolutely crazy on Friday, right? So people are not cooking. People are ordering out more. I hear the Blue Apron. I talked about
this apron thing. Like, isn't it like you buy all this? How does it work?
You got to do a lot of
food,
work,
though, do they? Don't you have to cook the food?
It's a meal kit. Yeah, you have to cook the food, but
what the hell fun is that? That's just silliness, isn't it? Like, okay, so you're gonna give me it's a recipe,
right? But it saves you the time of having to go out and think and plan the recipe and then go out and buy the food because
they send you the food.
Yeah.
Yeah.
Oh, okay. I thought it was just like a recipe book. Okay. So they actually send you the food that goes with the recipe and you cook it.
Think of like you guys both grew up with TV dinners, right? TV dinners, but for young hipster people who want to cook.
I like TV dinner.
There we go. That's it.
All right. So, but you have to cook the TV dinner yourself. So that throws people like me out because I don't have time to cook.
Well, you would if you didn't trade till.
Let's talk technical. $3 apron. It's all about $3. I don't care what this company does. This is all about $3 here. So this is multiple times. I mean, November, the entire month of November, $3 held, rallied up to $4.50, came back down, retested for basically January and February. Still hanging around there. $3 is support. It breaches that, you got to get the hell out. So it goes down below 295. I think that's the low of the year. Gets below that 294. I'm out. That's my stop out. So say 290 stop out if you're playing it from the long side. Good bounce. $3 bounced a lot of times there before. What's worked once or twice or 3 times sometimes works 4, 5, 6 times. So I can't argue with if you're buying it at 3. I can't argue if you're buying it at 290. I know that doesn't make sense to a lot of people.
Did you ever have the Swanson
sure.
hot turkey with mashed potatoes? Swanson
hot
turkey dinners.
Those are good. Man, those cheap dinners are good.
All right,
Tastes good. I know maybe they're not that healthy, some of them for you, but man, they're good.
You guys can talk about that while I grab Jeff Goldman. He's the author of a book, Failed Traders, 20 Common Mistakes Made by 100 Failed Traders, and potentially a new cryptocurrency resource news platform. We'll talk a little bit about that when Jeff comes on in a moment. We'll be right back. Welcome back, everyone, to Benzinga's Pre-Market Prep. Spencer Israel, Joel Elconin, Dennis Dick, and we are now on with Jeff Goldman. He's the author of Failed Traders, 20 Common Mistakes Made by Over 1,000 Losing Traders. Jeff, how's it going today?
Not bad. How you guys doing?
We're doing well here. Big sell-off in the market. I mean, I guess rampant speculation in Bitcoin really can't be blamed for it because Bitcoin had started to come off before the market melted down here. Me and you have been going back and forth here about 8,500. Just give us your view, during the recent decline and, not particulars, but, how you handled some of your exits, because I know you had accumulated in a nice position. Did you follow any of the rules that you write about in your book?
Absolutely. I'm always, I will never catch a top. I always will sell on the way down as opposed on the way up. And I'm a big trailing stop guy. So yeah, I mean, I've been selling all the way down. If you look at the charts, the whole December and January move is just ridiculous. And I feel like if you can find a charting company or a charting platform, you can just take out December and January. Some of these charts still, they look good. We have an uptrend. And I think everybody's dwelling on we're down 50% from the highs. But if you even look a year ago, Bitcoin was at 1,000. So literally at exactly 1,000 a year ago today. And we're at almost 9,000 today. And I think everybody's just, we're down 50% from our highs. So, yeah, I think that the December and January move were maybe exaggerated and maybe a lot of irrational exuberance for those 2 months. But I think the trend is still higher. And
how were your executions? I mean, here you are, in an off exchange, non-regulated products. I mean, you put your stops in. And I know you trade other currencies besides Bitcoin. I mean, were you just getting some huge slippage? And I'm sure everyone in the trend. Not at all.
There's not a lot of slippage. Not at all.
Really? So people are out there buying and selling as well. Anything with, like getting jammed on, your platforms or anything? I know that's been a big concern to people. I know you have different exchanges and different accounts that you trade through. Did you experience any problem like that?
No, overall the platforms have been pretty stable.
All right.
I know there was some highly publicized ones where the systems went down, but I haven't had any issues, and I trade on about 4 different exchanges.
So what are you looking for? I mean, me and you have been texting going back and forth about 8,500 here has kind of been my bogey, and back up at 87.92 here. You feel like that spike low that we had a few days ago, maybe a little bottom in there, maybe go back and test all those people that short, get back, over 10,000, get back into 5 digits. What's your bogey on this?
That's right. That's my number right there. It's 10,000, and it's just a number. It's one of those just big numbers. I think once it's at 10,000, again, technically it's not a big number, but I think psychologically 10,000 is that number that if Bitcoin can start trading over 10,000, I think it's going to bring all the cryptos higher. And that's in general, whatever Bitcoin does for the most part is what the crypto market's going to be doing.
And you're not all about
Jeff,
Bitcoin.
I just want to just to expand on that. So if this gets up over 10,000, that's when you're going to strike, or are you anticipating and you're striking now?
Well, I don't trade a lot of Bitcoin. I think there's more exciting cryptocurrencies to trade than Bitcoin. Okay. But as long as it's sitting here going sideways or slightly up, there's a lot. There's 1,500 different cryptocurrencies now, and they just keep adding more and more. And so just to look at Bitcoin is really, really being narrow focused.
What are you buying some of these other coins right now? They're all beat up here. Are you nibbling into some of these other ones?
You know what? I don't.
Again, a doggy coin?
No, I've never. And here's the thing. I don't know, and I've been saying this for a long. I said this probably the first time I ever came on your guys' show about when Bitcoin went over like 2,000 or 3,000 for the first time. I don't know if in a year these are at 0 or at 50,000. I don't know. I don't care. I'm a trader. I'm not an investor. So when I look at, hey, what are you buying here? It might be something I'm buying today, and then tomorrow I look at it and the chart tells me something, or the volume and the technicals, and then I totally don't like it the next day. So yeah, I'm always looking. It's so exciting right now because again, there's 1,500 of these, and probably about a good 300 of them actually trade with volume, and you can get in and out with very little slippage. So this is my thing, is just you just got to trade them, and you only can trade them for the most part from the long side. So it makes it a little easier because you don't sit there and look at the short side. But there's a lot of opportunity. If you go to coinmarketcap.com and just they list them all. They list all the cryptocurrencies, and you can sort by different columns, and you can sort by percent gain for 24 hours, 7 days, and there's ones up at 500-600% on a daily basis every day. So those are the ones that you should be true.
Like how do you know which ones though? Like, I mean, is it just you like it's all technical? Is that what it is when you're making your trading decision on these? All technical.
It's all technical. I don't know what I used to joke that I trade a stock. I would trade a stock, and I wouldn't even know what it did until the end of the day. I'd be like, what the hell does the stock do anyway? And I look, but with the cryptos, I definitely don't know what they do.
We know what they do. They got crypto. They got a coin.
I have no idea what they do, what their business. I don't even. I think Goldman Sachs came out last week and said, 95% of these won't even be around in 2 years. I agree with that 100%. But in the meantime, there's money to be made, and there's money to be made trading these things. As long as you still follow your same rules, get out, don't let a trade turn into an investment, and there's money to be made because these things move. As traders, all we want is volatility, and obviously the markets had some volatility last week, but the crypto world always has volatility.
Go over real quick what you wrote a nice article. I think we're going to try and get it up on our site or on Benzinga about why people should be trading currencies now. Could you just give us a couple of those highlights?
Yeah, the one I just touched on that, the volatility. That's definitely the case. You look at the stock market. There's some days where there's just no volatility, nothing's moving. There's always something to be found in the crypto world. day trading. There's no pattern day trading rule. That's really big in the U.S. markets. You have to have $25,000 in your account to day trade. Cryptocurrencies, you don't need that. As a matter of fact, the cryptocurrency world is a great way to get your dip your toe into the whole trading world, because you can open an account with not a lot of money, and what not a lot of money is for one person might be a lot of money for another person, but you can start opening an account. You don't have to trade round lots, you can trade fractional. You can literally trade $50 or $100 of something and practice trading, not only on your technicals, but on the psychological level as well. Those are two really important parts. And, technicals work. It's a great trading vehicles. Again, I don't try to make any kind of say what's a good investment. It's all on the trading level.
And Jeff, the other thing, you and I go back and forth. I'm a big open, high, low, close guy for stocks and for futures as well. And you say there is no close, and I'm like, well, they have to have a mark. We go back and forth on this, but the 24-hour market does help you eliminate, your gap situation, right?
Yeah. So that's another huge. Thanks for pointing that out, Joel. That's a huge advantage of trading the cryptos, is they're 24/7. So one is they never close. So if you're the type of trader that's just, you can't get enough of it from 9:30 to 4, you can trade all night long, and they stay active all night long because they're more active than some of the foreign countries than they are here. Then what you're talking about, Joel, as well, is there's no gap. So you don't have to, like, if you were short the market today and you woke up today, this market's screaming up, you lost money being short. There's no gaps. And as long as you don't get burned by a fast market, which can happen occasionally, you can put your stops in, and all the exchanges have stops. You have to use your stops. And if you use them appropriately, you're going to really, really eliminate any of those huge gaps that might really mess with your profitability.
All right, and
it trades on weekend, and it trades weekends too. So, if you're a guy that wants to be a trader and you have a 9-to-5 job, here you can start getting your feet wet in the after hours and on the weekends.
And, just like you had in the, back in the internet bubble, you had a lot of crazy companies going to wild valuations, come crashing down. But then, you look back 17, 18 years later, and, some of these companies have come back, have made new all-time highs. New companies emerge as the, as the internet has taken place. And tell them about the Crypto Profit, a new product coming out here on MarketFi here. Not so much Bitcoin related, but looking at the whole universe of 1,300 currencies. Talk a little bit about that and what's going on with the Crypto Profit.
Yeah, so the Crypto Profit, it's PROPHET, so it's profit with the profit. It's a new service on MarketFi that does exactly what I was just talking about. It's looking for trading opportunities in the cryptocurrency market. So we are not telling you that, for example, that IOTA or Dash or Monero is the next greatest thing in the crypto world and you got to own it because they're going to take the world over. That's not it. We're telling you that, hey, if we do buy alerts and sell alerts, and we might do a buy alert on, we might go with Bitcoin, but we haven't done many trades on Bitcoin. But we'll probably, we look at the top 300, some of them people probably have never heard of, and we put out buy alerts, buy it here. We put stop prices, and we put targets, and we actively at that point then manage those positions in terms of our initial targets and our stop targets.
And
so
Dragon
we might
Chain,
issue
right?
a sell alert. Yeah.
Got some Dragon Chain in there? Or is that the one we
Dragon Chain? Yeah, we've traded Dragon. So we started in January for the month of January when the whole Bitcoin was crashing. We were actually up 44%. And so far, year to date, we're up 52%. Again, and we don't overtrade. There's like right now, we literally only have one position. It's only a half of a position because we took half of the position off. It was actually in Ripple, which again, we don't love trading the big ones, but we have no problem doing. We really like to look at some of these other ones that people aren't really looking at, where you can get the huge moves, the 30, 40, 50% moves. And our time frame is anywhere from intraday to a week, or however the position dictates us to change our opinion of the position.
And Jeff, what is the site, or how do I access Crypto Profit?
It's on the MarketFi platform, marketfy.com.
And just search for it there?
Yes.
All right, Jeff Goldman. I guess now I will refer to you as the author of the Crypto Profit. Jeff, have a good day. Have a good one.
All right, Jeff. We'll see you later.
Okay, sounds good. Thanks.
Go Blue. Go Blue. He's a big State fan too, so we go back and forth on that. All right, here we are. S&Ps are still holding on to gains here, and I just want to bring up this 15-minute chart here because I think this is the tell-all here for the remainder of the day. You had a nice bump up, and then you had consolidation at the 25.35 level, just under the high from Friday. Then you had another bump up here. What time was that? That's when Dennis got up at 4 in the morning and started buying stocks up, seeing everything up. But really, since 4 a.m. here, you've really had some consolidation here. The low of that trading range, it's been 26.44. And really, the high for the session is 55. But it's really been between 44 and 50. So not getting crazy off the open here, but like to see what the market decides to bust over 26.50, go up and test up that pre-market high. You got nothing up till Wednesday's close at 68 and a quarter. And Wednesday's high, I don't know if anyone can remember that far back. That was up at 26.8650. Coming back on the downside here, if we don't hold that 26.44 level, who knows where we're going? I guess I would keep an eye on mid-range for the session as a temporary support level at 26.39.
Jump over here to individual stocks. The imbalances are growing and a lot of buys. There's a few sells in here too, though. Twitter's sell imbalance has grown to 156,000 shares. Keep an eye on that one. Still trading up 1.36% in the pre-market. I know it's traded a lot of volume, so in all likelihood, it's going to flip because it's already traded 396,000 shares. But, keep an eye on it. Could hold the opening price down a little bit, maybe give you a chance. But, sometimes when these things show weakness in the pre-market, sometimes it spills over in the regular session too. Pfizer, 217,000 buy. That's an enormous buy imbalance for PFE. Keep an eye on that if it opens too high, anywhere in the higher 34s. I think I might play it from the short side. Looking at ExxonMobil, who got some love from Carter Worth after hours there on Friday. It was one of his picks on Fast Money, and it exploded after hours from like 75, 78 up to $77 because Carter Worth liked the chart. Anyways, we know what I think of that stuff. But 77.11 is, or 77.23 is where it's trading at right now. So it's showing 176,000 to buy. So Carter having some influence there on ExxonMobil trading this morning. Procter & Gamble is a defensive stock with 123,000 share buy imbalance. Again, that might be one that I might fade into this. And obviously, you're always looking as traders just for opportunities. Some are going to be fades, some are going to be momentum plays. But often on these days, when you see the market up so much, if you see some of the defensive stocks gapping up as much as the overall market, like if a Procter & Gamble opens up over 1%, the market's up 1%, sometimes that's an opportunity to have a fade on that too. So also looking here, just other ones, GE, 339,000 to buy. Remember, negative commentary at JP Morgan. So if that opens up higher, it could be an opportunity up from the short side, obviously. American Express, 20,000 to buy. Boeing, 32,000 to buy. They're really mostly buy imbalances, Joel, but they're not that big. And I'm not surprised the S&Ps are leaking a little bit here because what are your thoughts here, though? Let's move away from the balances for a second. I mean, here we are. And if you look at the S&P charts just from Friday even, and we had the big sell out there and we started rallying around 130.
What are our pre-market traders doing? I think our pre-market prep crowd is just wailing on this market now here, Dennis. It's
starting to get hit.
Yeah, it's starting to get hit. I mean, just I mean, booking profits. I mean, anybody that bought in that, that downdraft on Friday, I mean, holy cannoli, you're coming up, you open up over, 23 handles. What really has changed, fundamentally? I don't know. I just saying 26.39 is mid-range on the day. Friday's high is right in that area. So that's your area of support. If not, looks for this thing to go back down to the, the pre-market low. But people sitting on, 135 point rally off the lows. There must be some kind of news out here or something. Luke, do we have a number or anything here? Because we just lost.
We're getting hit hard.
You know what? It's just people. It's just the institutions listening to the pre-market show, and they just go out there.
They're taking their I mean, how do you not though? Okay, let's just stop and think about this rationally for a second. Are we going to go up another 1,000 points from here? That would take us right, like just talk hypothetical scenario analysis, talking pure technicals here. So here we are, 264. If we went up, and you can say, okay, well, we're 1,200 points, or we're 120 S&P points, I'm talking down, but we're 120 S&P points from the lows that we had at 1:30 on Friday. So in half a trading session, and an overnight session, we're up 120 handles. I mean, anybody who bought stocks just in that dip is up significantly already, and they're probably booking profits. And then you have everybody that says, oh my goodness, I looked at where my portfolio was, and now they're giving me this chance to get half of my losses back. I mean, because it really is, when you look at it, like we're now 100 and, looking at, we're still over 200 points off the highs, but still, Joel, when you talk about this, 140 off the lows, 200 off the highs, I mean, you almost had like a 33, 40% retracement here in half a session. How do you not ring the register if you bought anything down there? And how do you not lighten up?
Both.
With all the uncertainty.
Yep, both. You know how we always look to the left of the chart, to find your support and your resistance, right? And hypotheticals. Well, let's look to the right of the chart here, right? And, maybe the 25, 29, the quarter 30 is going to be a super long-term low and build a base here to go back up. But you're going to do some trading here. You're going to be, who knows? We've had a really big range. But, eventually we might dip under 2,600 and make a run at 2,700 and then dip. But you're going to have to do some building here. You're going to have to establish a base. You have the double bottom to lean on, but we talk about backing and filling on the downside. That's going to happen. But, eventually, like the 9-day average range here I have is 71.25 handles. It's going to come down. I mean, it's going to consolidate and then, take a little rest and a breather. So who knows how exactly it's going to look like here on the right of the chart, but things are going to be in a consolidation eventually. So that's what I'm looking for. I'm not looking at us for the bust down and break out that low. We're certainly not going. I don't know what kind of time frame I want to make a bet that we're not making a new all-time high. If that, who knows? Maybe we made the all-time high for all time. You just can't predict these kind of things. But looking for some consolidation eventually.
Yeah, and the VIX is eventually going to come down here, but the ranges are there. I just think there's so many people who got spooked there, and now you're getting this big rally. It's hard to buy in and chase this rally and say I'm going to buy stocks now when you're 120 handles off the low from Friday. I just think it's going to be more money managers prone to sell into this. So that's my concern. I think we actually could go red here today. That's how I'm playing.
You think we'll go red?
I think we could go red here today. Yeah,
I'm not going to fake.
I mean, we can go anywhere. These are markets that obviously we haven't seen in a long time, so anything can happen. But if I'm playing this market, I think I'm fading it.
Yeah,
I think I'm fading this rally.
Okay.
So red is 30 handles, 25 handles down. I don't know if we're going to go red, or off the more. I think we could go red today though, and that's why I think
I won't disagree with you.
I'm playing this from the fade side.
I think the longer it takes, and now we're 13 handles off that high, the longer that it takes to get over 26.55 and clear 26.55, I think, whether you're a 5-minute, 10, 15, 20-minute chart, the longer it takes to do that, the more the chance you got out of the back and fill. And that's exactly what we're doing now. 26.39, that's mid-range on the day. That would be a place I'd cover short, but I certainly wouldn't stick my head out on a long here. So a lot of good trading action, and I hope we can give you guys some good pointers. Dennis, any final comments for the day besides you think we, could see some red today?
Just playing it conservatively is one thing I will say. Like when people want to get bigger, with so much more volatility,
Don't
I
need
actually
to.
usually reduce my position sizing because obviously if you're trading normal sizing, and obviously, you know, when you had the ranges that we were getting throughout the last couple of years, you know, a 0.5% range throughout the entire day, I mean, we're getting that in sometimes a couple of minutes. So I always back off my size a little bit there, just because you don't want to get run over if your call is wrong, and you know you can lose a lot of money in a hurry. That being said, this is the best trading environment for traders out there. You get that more volatility. I mean, where can you get these kind of moves? You're making, you know, you're in one day you're making your week or your month sometimes. Like, just to put it in perspective, last week I made more money than I had in any month in the last 2 years in one week. So that's showing you how much volatility is out there. That's why companies like Virtue Financial, VIRT, are kicking butt in this market, because we're doing a lot of, you know, statistical arbitrage, taking advantage of pricing inefficiencies. And for the most part, I'm not saying I'm picking off, you know, free money. I'm doing stuff that I have an edge on, though, that, you know, there's a statistical probability that I'm right. And that's, you know, what I'm trading the most here. And that's why I was getting paid last week. And in these types of markets, I always get paid. My best year ever trading the markets was 2007 or 2008. My second best year was 2007. My third best year was 2009, the financial crisis. Not because I'm just out there shorting stocks. I'm more of a hedge guy. I'm buying and shorting stocks. So I'm taking advantage of my market pricing inefficiencies. And that is, you know, just full of them when you get these types of markets.
All right, Spencer, you want to wrap things up and let us know what's on the docket for Tuesday?
Sure. On the docket for Tuesday is the same guest on the docket every Tuesday, and that's Nick Shaheen. He is the author of Create Income with Option Spreads on the MarketFi platform. If you want to catch any part of today's show again, including our interview with Jeff Goldman, you can find, first of all, you can find his product also on the MarketFi platform. That's MarketFi, MarketFi.com. Just search for the Crypto Profit to find Jeff's product on there, or catch our podcast, as I mentioned, on iTunes, SoundCloud, and Stitcher is where you can catch Jeff's interview again. Thanks to all of those of you who joined us today, both in our chats on YouTube and at premarket.benzinga.com. Hope you all have a good rest of your day, and we'll see you folks tomorrow.